Good morning. I wanted to make the weekly outlook video for the week ahead, which I believe should be the third week of February. And as always, we will start with the dollar index. But for a second, let's switch to the IPDA Data Ranges and look at things from the daily chart, because not much has changed from the weekly perspective, which I was hoping to see some measure of change. So let's start off with the dollar index as always. Going up to the weekly chart, we can see that we still have this sell side imbalance residing at this area from November the 13th of 2023. When drawn out in time, we can see the same bearish fair value gap has been digged into once and twice now. Well, recently, of course, it's been tapped into here, but now we're digging deeper and deeper into it every week. And last week we rejected from this weekly buy side imbalance, sell side inefficiency, this tiny fair value gap here. And when we dipped into it, I was expecting a measure of move to the upside, that we could get a closure above this sell side imbalance. The primary reason for this is because I wanted to see if we could use this sell side imbalance as an inversion fair value gap to support higher prices. It was going to be clear in terms of direction where the dollar index would be going, which in my case would be the upside. And since we did not get this, going down to the daily time frame, we can see now that we also, it's probably not so visible, but we also closed below this buy side imbalance. So notice how when the week started on Monday, we dipped down into the weekly fair value gap, which was also a daily fair value gap here, and rejected higher on Tuesday. So I was expecting a retracement into this fair value gap here, this buy side imbalance, then create a swing, a higher swing low, indicating higher prices. But again, as I said, it might not be that visible, but we actually did close outside of this fair value gap right there, and obviously on Friday as well. So this makes me think that we may see a move back to the downside, at least temporarily, before continuing higher. And we'll get to where exactly I'm expecting it to go to from now, which is on the IPDA Data Ranges. So this is the same dollar index chart on the daily time frame, but with the 60 days look back, highs and lows delineated on the chart. So I say that we might get some measure of move to the downside before seeing an expansion to the upside. And if I was to project where that would be, it would be the opening price for this month of February, which is at that level at 103.512. So we may see a move that goes back to equilibrium, because the opening price for the month is basically our equilibrium for the month. So we may tap back into this equilibrium, which is also a bullish order block, and then continue back up to the upside. So short term we might see a move to the downside, but I'm expecting higher prices overall, to clearing these relative equal highs, basically this initial consolidation of the market maker buy model, which I've been repeating over and over for the past 3 weeks or so. So that's my bias on the dollar index. Now if I want to pair this with a currency pair, I would say let's start off with the yen. So let's go to USDJPY. That's the dollar with the yen, and clean this up a little bit. We can clearly see on the daily chart that this yellow line is the all-time high. Well, we had an all-time high there, and this yellow line, this swing point, this swing high, was when we attempted to clear the all-time high in November 2023. We failed to do that, and now we are retracing aggressively to the upside, and I believe this time around we will finally clear the all-time high. One indication that I like, one indicator that I like on the dollar index as compared, on USDJPY as compared to the dollar, to the DXY, is the fact that we actually did create a higher swing low. So notice how we have the same fair value gap here. This fair value gap broke a swing high, a previous swing high. Remember, a swing high is essentially a high that has two lower highs in the left and right of it, on the left and right, like in this example. So this is a swing high. It got broken to the upside, making this a market structure shift or a continuation to the upside. And then notice how we had another swing low formed, which was higher than this swing low. So this swing low here formed higher than this one, just like how we did in this case. So we had a swing low that was purged, tapped into a high time frame PDRA, expanded to the upside, and then we get a higher swing low. And then of course the trend continues, higher swing low, and now we got a higher swing low inside of a PDRA as well. So yes, we did dig down deep into this BC, this daily buy side imbalance. I can agree and I wouldn't neglect that. We did dig down into this BC, but we have two characteristics that makes me confident in longing USDJPY as well as obviously the dollar index, even though we are probably going to get a bit of bearish movement on the dollar index before a continuation to the upside. We have a closure that's above the consequent encroachment of this fair value gap. So notice how the midpoint, which is this dotted line delineated here, never got closed below. Yes, we went below the consequent encroachment, the 50% mark, but we didn't close below it at any point. So I like the fact that the bodies remained above the consequent encroachment, as well as the fact that we just created a higher swing low as well. So I'm expecting Monday, Tuesday, Wednesday and Thursday to bring bullish prices that clears the all-time high, or at least gets to this high, which obviously is next to the all-time high, and that's at 151.912. So I'm expecting some level of move to the upside from here, from Monday. I don't expect too much of a retracement to the downside. I especially don't expect this swing low that was formed on Thursday and confirmed on Friday to be taken. I don't expect that to be the case. So I'm expecting a move to the upside, even though Monday is a bank holiday and Tuesday I believe there's no news. Wednesday there should be something scheduled, but Thursday and Friday we definitely have red folder events on the dollar. So that's what I'm expecting on USDJPY. Moving on to, let's actually see if we can highlight the same thing on the IPDA Data Ranges. I do not have the 20 days look back, 40 days and 60 days look back, and I don't want to make this video unnecessarily long by delineating all those lines, which is why I do it before the video itself. But probably one of these days I will make a video on how I do it. But let's mark out the opening price for the month of February. So February 1st was here. We opened, dig down, created a swing low. Yes, we already swept this swing low, we already took this liquidity at that point. We opened, dig down, created a swing low, and even if you were not able to catch the buys, if you were not able to long the UJ from this fair value gap here, you would wait for a higher swing low to form so that you take it on the next one, on the next candle, and we got exactly that. So right now I'm not expecting USDJPY to go back all the way to where the opening price for the month is. I'm expecting higher prices from here until the all-time high are taken. So that's my view on UJ. Let's move on to Euro. On Euro dollar, from the daily perspective, we swept sell side liquidity last week. We actually took it by a few pips, and I was expecting a measure of move that continues to the downside. and we did get that on Tuesday. Then on Wednesday we had a bullish candle which created a fair value gap here in the form of a sell side imbalance. So I was expecting us to trade back into that fair value gap and continue lower, but notice how we did not respect this fair value gap in the form of a sell side imbalance, buy side inefficiency, a CB. We closed above this CB, and Friday came, we dig down, traded and filled this CB, which has now become an inversion fair value gap. So at that point now, this fair value gap is now considered to be an inversion fair value gap. When we go down to the 4-hour time frame, we notice that we also have a 4-hour buy side imbalance within this daily inversion at that point. So this 4-hour buy side imbalance gave me a 15 minutes. I waited for a 15 minute confirmation to enter this trade, which I actually took on Friday, because a 4-hour PDRA you need to get it for the 15 minutes entry. So yeah, we got this fair value gap in a form of a buy side imbalance as well on a 15 minutes. We dipped down into it, and I took my profit at the swing high, the previous swing high, and the last partials were taken off there because the day was ending, especially for Euro. So what I'm expecting for next week at the very least is for us to come to this swing high from the 4-hour perspective. But looking at the daily chart, there is a higher probability of us actually coming to this daily swing high, and I will explain more using the IPDA data ranges again, that similar to what I just did with the dollar index. So going back to the IPDA section, we've got the euro dollar, and we have the 60 days look back and the swing highs and lows that comes from those areas. So of course we have these relative equal highs at the 20 days look back, which is a high that may be targeted at some point in the future, but for now we can clearly see that with the month open here on the 1st of February 2024, we traded higher, taking out a previous swing high. At that point on the 2nd, we took out a previous swing high, displaced lower, and then finally on the next day took out the 20 days low, 20 days look back low, and then continued to take out the 40 days look back, and of course we did the confirmation right here. So right now on the daily time frame, we have officially created a lower swing low after taking the 40 days low. For confirmation, you would now wait for a higher swing low to form that could take us higher. But even without that happening, based on order flow right now, remember I did mention the fact that we could see ourselves taking out that 4-hour swing high and the probability of us going to the daily swing high. So this right now would be my drawn liquidity going into next week, and then going through that, I believe that we are very likely to come into this opening price, the equilibrium for the month, just to make everything equal. So this should be, let's just call it buy side liquidity, and these are my draw on liquidity levels. So I'm expecting us to come through this buy side liquidity next week. Of course, the entry can be used, multiple reasons can be used for the entry. You can trade the London session kill zone, you can trade the New York session kill zone, you can essentially trade any kill zone, but this is my final target, the buy side liquidity. Going through that, we see ourselves going to the opening price for the month. So on the 1 hour chart, for example, I would not be surprised if say, because we've already swept liquidity during the news event that came out on Friday, there's a high chance that we could see ourselves trading back into this order block that now has been broken and is considered a bullish breaker. So in the same fashion that we just talked about on the dollar index and USDJPY, we might see a possibility of us just opening and not trading too far deep down and running straight to the target from there. So we might see price just open, maybe trade a little bit below the midnight price, then expand to the upside, targeting this daily swing high. But this is my draw on liquidity going into next week, and I already mentioned that if we go through that, we are possibly going to see the opening price at 1.08185 right there on the euro. So let's move to GBPUSD. Then we can call this a day. So on GBPUSD, on the pound dollar, we talked about it last week, where I wanted us to trade back to the opening price. For those that remember, I'm going to link the video for last week in the description of this one. So last week, if you remember, I was targeting the opening price, and we can see how price literally went there with precision, not perfectly, but with spreads counted in. We can call this perfection. So we went straight to the opening price and rejected aggressively from there, potentially targeting the swing low, and that's the 40-day look back low. So of course we didn't continue higher as I would have liked us to see. I wanted to see if there was a chance we could trade back to the swing high that started the month and the ones above the 20 days look back high. Of course we didn't continue that, so we might see that unfold this coming week actually, but if not, that's fine too. I'm just reading order flow, and we can see that we had a swing low right after taking out the 20 days low, and then we created a higher swing low. We continued, created an even higher swing high, essentially confirming our bearishness on the pound, or our bullishness on the dollar. But now what I don't like is the fact that we just created another swing low. The only thing that can make me confident in continuing to sell the pound would be this swing low being violated again, telling me that we are disrespecting swing lows. We do not really consider them to be critical, and we are going to continue trading to the downside and potentially aiming for the 40 days look back low. But I've already mentioned that short term we may see us possibly trading higher because of the dollar index. So personally and conclusively on GBPUSD, I'm looking for slightly higher prices, but I don't have a target. I don't have a smooth or a clean draw on liquidity, and we may see ourselves not even being able to take out this high that we got on Tuesday. So I'm not going to touch the dollar index because of that uncertainty. I'm not going to bother touching the pound with the dollar index. So I'm only going to be trading USDJPY along with EURUSD. Moving on to the indices, starting off with NASDAQ. Last week we got a signal that I actually liked. I like the fact that we cleared liquidity and continued grinding higher until this point on Monday, the 12th of February 2024, and then we displaced aggressively to the downside. I like that signal because I wanted to see us continue digging lower and finally start the bearish run that I was looking for. As I said, I am looking to sell the NASDAQ anytime from the second week of February. So of course we got that aggressive move to the downside. We got a very tiny fair value gap here in the form of a sell side imbalance. If you look closely, you can see the difference between the low of this candle and the high of this candle. This becomes our fair value gap in the form of a sell side imbalance. So we traded up into it, but I didn't like the fact that we traded and closed above it, and now we've traded and closed below it. I don't like that signature, especially when I'm bearish. So I did not bother touching the NASDAQ last week, but I am bearish on these markets, and I'm looking for a potential move to the downside. Going to the 4-hour chart, we can see how we, let me delete this for a second. We can see on Friday we continued grinding higher, tapping into this fair value gap one more time, but we closed above it again. We displaced lower, clearing this sell side liquidity residing at the swing low. We closed above the swing low as well, traded back into this fair value gap there in a form of a sell side imbalance, and now continuing lower. So going into next week, I'm expecting bearishness in these markets. I'm expecting us to continue rallying lower to at least this swing low, and then going through that, I see us possibly coming down to this swing low at the 17,224 level. So I'm keeping an eye out on that. I also like the fact that we rejected from this CB without getting to the consequent encroachment of it, showing me that it is heavily bearish and cannot wait to reach the target. So I'm looking for bearishness in these markets. Going down to the 1 hour chart, the 1 hour time frame, I don't see much of a PDA rate that I could use besides the 1 hour fair value gap residing here. So let's set an alert and on that. Let's do that, and there. For those wondering where the fair value gap is, it's right there between this candlestick's low and this candlestick's high. So I set an alert to let me know when we tap in there, because I'm looking to sell off NASDAQ, targeting the swing goal right there. So that's all I have on the NASDAQ, and going to the E-mini S&P 500, ES in other words. On the daily time frame, the fact that we traded higher, disrespecting the same fair value gap, I was expecting to see some sort of SMT divergence. I was expecting to see this swing high swept on S&P 500 while the NASDAQ held its high. But of course we can see that both of them failed to clear the buy side liquidity at the all-time high. But we do clearly see that ES on the other hand is much stronger than the S&P 500 than the NASDAQ. I mean, we are clearly targeting, well, I'm targeting this sell side liquidity at this swing low, and going through that I'm targeting this. So these are my two draw on liquidity going into next week. But I've already mentioned the fact that we did not get the SMT divergence that I was looking for, and I would have used YM, which I can pull up right now. I would have used YM for comparison, but YM as well was not willing to make a new high. So because of that, I'm not too sure about this trade opportunity, so I'm not going to participate, but I will tape read and potentially intraday trade this in this index fund. And there is one more that I wanted to add because of a request I got, which is on DAX, on German 30 or German 40, whichever you call it, or whichever your broker calls it. So we can clearly see on German 40 on DAX that we got a tap into this high time frame PDA array from the weekly chart. We created a swing low, a higher swing low than the previous one, which was all the way down there on the weekly time frame. We also see us having an immediate rebalance at this point. Trying to see if I can zoom in a little bit, but considering the high of this candle, notice how the next candle came back exactly, well, maybe not precisely, but exactly to the top of this candle. That's an immediate rebalance. That's a very strong signature that price may continue rallying to the upside. So of course we continued making all-time high, and last week we made a new high. Going down to the daily time frame, I am not bearish in these markets, so I would say that we still are possibly going to see a continuation to the upside, projecting higher prices in this market. So I'm not bearish at all here. But if you would like to see where we are potentially going to get to, I can measure this last move to the downside from that swing high on December 14th to the swing low on January 17th. And let's just use one of my templates. Go to the settings, style, and enable few extensions of 2, 4, 3, and we see where we could possibly project prices next. So on the daily time frame, we can see that we swept liquidity. Let's highlight it at the swing low. I don't know if we swept this liquidity as well. Yes, we did. That's a turtle soup right there, and we tapped into this PDRA, this fair value gap, which I know I'm using white lines again, but should be visible. We tapped into that fair value gap in the form of a buy-side imbalance on a daily time frame, rejected higher. So I am personally expecting to see a higher swing low formed inside of this daily fair value gap right here. So I'm expecting to see a higher swing low and then a continuation to the upside, potentially targeting the levels up here at 17,663. And of course, depending on how bearish we might be, we could possibly see these projections unless or until we start breaking weekly swing lows, trading to the downside. So I'm expecting a higher swing high inside of that daily fair value gap in the form of a buy-side imbalance, which also confluences with this other block from the 13th of February. So that's my prediction, my foresight, and what I'm expecting to see on DAX. For now, that's all I have. Stay safe, good luck, and good trading.